Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door Podcast. We are jumping right into the data today. We got a request from you, our listener, for a deep dive into, well, one of the most interesting markets on the South Shore right now.
Kingston, Massachusetts. Zip code 02364.
Exactly. We pulled the full November 2025 report, and we're covering everything. Single family, condos, the whole shebang.
And our mission today is a little tricky because on paper, this market report looks like a tale of two completely different towns.
How so?
Well, you glance at the big headline number, the median sold price, and you'd think the market just fell off a cliff. It's down almost 20% in 1 month.
Wow, okay.
But then you look at how fast homes are selling, how little inventory there is, and Kingston is maybe the most aggressive seller's market we have covered all year.
So we're here to figure that out, to resolve that contradiction.
Exactly. We're going to explain why the fundamentals are way stronger than that one scary price number might suggest.
Okay, let's start at the foundation then, the basics. Speed and scarcity. Looking at this data, there's no question, Kingston is a seller's market.
A strong one. I'd even say an extreme one. And the clearest indicator, for me anyway, is always months of inventory, the MOI.
And that number is, it's brutal for buyers right now.
Oh, it's the stuff of nightmares. 4 to 6 months of inventory, that's a balanced market. Under 3, sellers are in charge. In November 2025, Kingston's MOI fell to just 1.07.
1.07? Let that sink in. That's not just low. That's critical. I always think of like the size of a lifeboat. At 1.07, you have just enough supply for 1 month of demand before the shelves are totally bare.
And it's the speed of the drop that's so remarkable. It didn't just stay low, it plunged. It's down a staggering 34.76% from October.
In just 1 month.
In 1 month, supply was just consumed. It's like a run on the bank, but the asset is houses.
So if inventory is that tight, down by a third in 30 days, you have to assume that creates, well, a sense of desperation on the buyer side, right?
Yeah.
How fast are properties actually moving?
At a breakneck pace. The median days on market, or DOM, tells you just how little time buyers have. In November, the median DOM dropped to just 7 days.
7.
1 week, and that is down 61.11% month over month.
That's a wild statistic. So just to put that in perspective for you, if last month you had maybe 2-3 weeks to line up your financing, think about it, talk it over. This month, you had a week.
Or less. A median of 7 days means half of all homes sold went under contract in less than a week.
Yeah.
It totally eliminates casual browsing.
Right.
You have to have your financing locked, your lawyer on standby, and, be ready to jump into a bidding war the moment something good hits the market.
Okay, so this is where the conversation gets weird. Everything you just said, the 1.07 MOI, the 7-day DOM, it all just screams seller's paradise.
It does.
So then why on earth did the median sold price drop so sharply? The data says the MSP for November was $661,000. That is down almost 20%, 19.88% from October. How is that possible?
And that is the crucial question, isn't it? If you just read the headlines, you'd think the market was crashing. But that number, it's really a statistical anomaly. It's not a sign of a real drop in value.
So how do we prove that?
We have to look past the median sold price and look at a more stable metric, the median estimated property value.
Okay, explain the difference for everyone listening, because this is really the core of the whole paradox.
So think of the median sold price as just a snapshot. It's super volatile because it only reflects the specific houses that happen to close in that 30-day window. The median estimated property value is more like a long-term stock index for the town's housing. It tracks the overall health and appreciation of all the properties, regardless of what sold.
And what is that long-term index telling us? Is it also down?
Not at all. It's stable. It's at $714,990. And crucially, it's actually up a little, 0.5% last month, and up plus 2.9% over the whole year.
So the real underlying value of Kingston real estate is healthy and still appreciating.
Exactly. That number's our guardrail. It tells us the equity is sound.
But the houses that actually sold in November had a median price that was, almost $140,000 less than that estimated value. That's a huge gap.
It's a massive statistical skew. And the only rational explanation is a temporary change in the number of homes that sold.
Okay.
Meaning in November, we saw a ton of sales activity concentrated at the lower end of the high demand price range. Maybe interest rates pushed more buyers into that $500,000 to $600,000 bracket, or maybe sellers of $1 million homes just decided to wait until spring.
Right, so that funneled all the action into a lower price point,
Right.
which dragged the monthly median way down.
Precisely. Even if every single one of those sales was super competitive.
And we can prove that, can't we?
Yeah.
Because if the market was really tanking, buyers would be getting discounts.
And they are not at all. The last piece of the puzzle is the sold to list price percentage. It's 100.4%.
100.4%. So buyers are, on average, paying slightly over the asking price.
Yes. And that's up 1.5% from last month. You just don't see that in a falling market. It's the
No.
clearest sign that the demand is still fierce. They're just fighting over the $600,000 houses, not the $1.2 million ones.
That makes perfect sense. Okay, let's look at the actual transaction numbers. That should really prove this concentration theory.
It does. The raw numbers showed demand just devouring supply. In November, 14 properties sold. Now compare that to how many active listings were left at the end of the month.
How many?
Only 12.
Wait, really? They sold more homes than were even left on the market.
The demand is so hot, things are going under agreement before the listing is even fully syndicated, it feels like.
That is pure scarcity. So what does that do to sellers who have these high-priced listings just sitting there?
It gives them immense power if they're priced right. But we are seeing some resistance at the very top. The inventory that is left is expensive. The median list price for those 12 active listings is way up there at $809,950.
And even that is down about 11% month over month, so sellers are starting to adjust a bit.
They are. The MLS data shows how slim the pickings are. I mean, you basically had 2 active listings defining that high median price. One at $649,000 and another at over $1 million.
So if you're a buyer looking for something under $700K, your options were basically zero.
Practically zero.
Okay, so where do those 14 sales actually happen? The distribution should show us that sweet spot you were talking about.
It does, very clearly. The highest concentration of sales, 4 of them, was in the $500,000 to $599,999 range. That was the hot spot.
Right.
Then you had strong activity right above that, 3 sales in the 700s and 2 in the 600s. That cluster is what created that lower $661,000 median sold price.
And it's important to note, even the more expensive homes that did sell, they still performed well.
Oh, absolutely. The 2 homes that sold in the $800,000 range, they still sold for 98% of their original list price. So sellers didn't have to give much away at all.
Let's zoom out then and put this one volatile month into context.
Yeah.
Because that dip in November really does look like a blip when you look at the longer-term trend.
It really does. If you look at the median estimated property value over the last 2 years, it's up almost 14%.
14%. That tells you the equity growth in Kingston has been huge and it's been sustained.
And even with that November dip, if you smooth it all out, the median sold price year over year is still up 13.97%. This was a temporary shift in sales volume, not a reversal of market value.
So knowing all this, what's the actual advice? What should you, the listener, do if you're trying to buy or sell in Kingston right now?
Let's start with sellers.
Okay, what's the takeaway if you're thinking of listing your home?
Well, for sellers, you have undeniable leverage. The scarcity is real, the speed is real. You will sell fast, but you have to be careful with your pricing. That high median list price is facing resistance.
Right, it's down from a year ago.
Exactly. So don't overreach. If you price your home competitively based on what's actually selling in that $600,000 and $700,000 range, you won't just sell fast. You'll likely get multiple offers and go over asking. That 100.4% ratio proves it.
And what about for buyers? I mean, 7 days to make the biggest financial decision of your life. That's incredibly stressful. What's the strategy?
Buyers have to be ready to move with military precision, a full pre-approval, not a prequel. You need to act the second something lists. And based on this data, your best bet is to focus on that $500,000 to $700,000 bracket. That's where the action is.
So the final word is that the market's fundamental health is excellent. The price drop was a fluke.
A statistical fluke caused by intense competition in a specific price range, yes.
Okay, so here's a final thought for you to chew on as we wrap this up. Given this insane inventory level, just 1.07 months of inventory, and the fact that 14 homes still sold in a slow month like November, how much coiled up pressure is building for the spring market in 2026?
Ooh, that's a good question.
When you have demand this severe and it's being held back by the winter slowdown, that first wave of spring listings is going to face, historic levels of buyer intensity. So prepare now. The speed isn't slowing down. It's just being bottled up for a little while. If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore from Southie to Sagamore, give Jim Aldred a call. He would love to help you. Thanks for listening, and see you next time on the Big Door Podcast.